Hi guys, welcome to part two of the strategy. We're going to go over how to get entries now that we've gone over the higher time frame. Honestly, the entries might be the toughest thing aside from really having that self-awareness on the chart when you're going back and forth between taking out liquidity on both sides of the market. Um, you may have a harder time with finding entries. So it just really depends, but it is pretty much going to be the same things that we were looking at in the 4 hour, and you'll see how crazy it is. It's just you're really looking for the same things just on a lower time frame. Okay, so we have the same exact structure that we are going over on the higher time frame and just the overall moves of why things were happening, how we were taking out liquidity, and we were able to see reactions on the higher time frame. So we have this structure, and like we talked about in the previous video, price had just taken out liquidity, and we went ahead and hit a POI on the 4 hour. And like I said, seeing this gives me a really big confirmation that we'll have a nice reaction here, and I will more than likely get into the scalp because of this higher time frame POI getting hit. So when we see price just hitting it right here, so let's pretend that this is live market, and as we're seeing it, price had just pushed into this POI. And what I like to do is when I do see this on the higher time frame, whether that's a 1 hour or a 4 hour time frame, I like to quickly kind of drop down to the 15. So I'll kind of glance at the 15. To be honest, I don't stay too much on the 15-minute time frame. I really and mostly are on the 1 hour, 4 hour majority of the time just to get that directional bias of the market. And then honestly, I pretty much straight drop down to the 5 minute and 1 minute from there because as long as I know where I am on the higher time frame and it's hit a higher time frame point of interest for me, then I will just drop down because when price hits a higher time frame POI, more than likely, like I said, even if it's a failed swing lower, swing high that's created, so meaning if it's a failed area that's created, it's not going to hold, that's still okay because we're still going to get some sort of reaction there. So that's one thing that you should always remind yourself of as well is like if you're scared of getting your entry ran through, you shouldn't really be scared because we're scalping this, we're going to get um a good enough reaction for a good enough risk to reward when we're scalping. So that's the great thing about it. You can be wrong and still profit at the end of the day. But if you still feel like that's a little risky for you and you don't want to take that chance, that's completely fine. You can just be more patient and you can wait. I'm really aggressive, so I don't really care, to be honest. I'll just get right in, and obviously getting right in with the right confirmations, and the right judgment on price action and structure. I don't just get in blindly. So definitely there's a difference between actually getting in with those confirmations versus impulsively getting in. So you don't want to impulsively get in just because you have FOMO, okay? Just because we scalp does not mean that we have no patience. Literally, like when you do scalp, I've noticed that you still need to have that level of patience. And I think that's what a lot of people have misconceptions on scalpers is, thinking that we can just hop in impulsively and we can, okay? I'm not saying that we can't just hop in a quick trade. Of course we can. But at the same time, we also want to be aware because we're hopping in so quick, we can get taken out just as quick. So if you did drop a heavy lot size, like just be wary because if you drop a big lot size, like be prepared to either win or lose that based on where you enter. And that's why I really stress on truly being self-aware on this strategy and really understanding it because it takes precision to be a scalper. Okay. It's not easy as everybody thinks. It's actually there actually takes a lot of precision and also discipline. Because you also don't want to overtrade. Like for me, I really probably look for about 1 to 2 scalps per session. I don't really trade more than two trades, especially if but if they are, if they are losing trades, I will give myself about 2 to 3 times. And if I do lose those two to three trades, I will stop trading regardless. So I will not take more than 3 trades max per session. So those are, obviously rules that you would have to set in place for you once you get into scalping. But let's get back into the charts. So, like I said, I pretty much just glance at the 15 minute. I don't really spend too much time on it unless unless I just want to look for a really, really quick scalp. Like I'm not so interested in looking at the higher time frames because sometimes I have days like that where I don't really feel like doing top down analysis, and that's another pro to being a scalper is like we don't like technically we don't really have to be on the higher time frames. Of course, it's I recommend it obviously, but I will say even for myself, I don't really need to be on the higher time frames. And if I'm just not feeling like doing top down analysis, I want to get something really quick, then I will just start off on the 15 minute, but still looking for the same things like we did on the higher time frame. So obviously seeing if we've hit a 15-minute POI somewhere, and just seeing where we are in the 15-minute before I even drop back down to the lower time frames. But anyway, so we have this structure, like I said, price had reacted from that 4 hour POI. And I immediately dropped down to the 15 minutes just to see how price is looking. So just based off this 15-minute, I mean, if this was live market, obviously I do like this engulfing candle that we had right here. We had a nice bullish engulfing candle and that shows volume to me. And obviously this is showing such a strong 15-minute candle that I know when we drop down to lower time frames, there will be a break of structure. So this automatically, just me glancing at the 15-minute, this just gives me confirmation that I want to get into buys. Okay. And another confirmation too is we already saw it on the 4 hour and the 1 hour, but we can see it a lot more clearly on the 15-minute as well. Okay. We see that this was built up liquidity, and what had happened was price had just cleared liquidity right here. And this is something that we want to look for. We talked about how we know a low or a high is strong is if price if price clears liquidity and it breaks structure. So we see here that price had already cleared liquidity, and what we're waiting for next is a break of structure, which we obviously already have right here. We had a 15-minute break of structure, meaning that it is pretty strong because we do have a break of structure on the higher time frame. I definitely would trust it a lot more than the lower time frame. So this would just really confirm to me that we are at a market structure shift right now. So I do like how this is looking. So I'll quickly glance at the 15. So I do like how this is looking right here. And I also will mark up an area that I'm potentially looking at as well. So just based off of this alone, obviously whenever price pushes up, and it's probably going to push up to grab some liquidity, we don't exactly know where just yet, because we are going to just scale on the lower time frames for now, but it's looking like it is going to push into something, into another POI before it comes back down to grab those sell stops. So because we're looking at that, sometimes I just like to draw an area where potentially price could come back down to. So this would definitely be like an area of interest in me. It's simple break and retest, right? Not saying to enter at those areas, but I mark those areas so I'm aware of where other traders may get into the market, because that's exactly what we're waiting for is liquidity. So if you know where other traders are getting into in the market, it's a good way for you to kind of gauge when you want to enter, because you don't want to enter too early. A lot of times people talk about how they will enter a position and they get stopped out, and then eventually price ends up going in their direction, and I personally hate when that happens as well. So you don't want to get in too early. You want to stay patient with it, but just keep in mind that you want to mark areas where potential trades could happen. We obviously know that break and retests do happen and people trade them. So this is kind of something where I have as a reference point, like, hey, okay, once we start creating that trading range on a lower time frame, I know that price may come back down to this area, just because it is an area that most traders will be looking at. So we could potentially create some sort of liquidity here before taking it out and continuing bullish. So this is what I would just kind of peep on the 15-minute, and then I would drop down to lower time frames. So let's see what's going on the 5-minute. Nothing yet is going on the 5-minute. Obviously, it's still confirming to me that we did still break structure. So let's also, this is another confirmation to me. So I'll go like 5 from the 15 to the 5, and I'm just glancing at everything, right? And then once we hit the 1-minute, I can kind of get a better idea and gauge my entries at that point on. But I just want to look at the 5-minute to make sure that everything aligns with the higher time frames. And it does. So we do still see that we have a break of structure, and this was a nice bullish engulfing candle as well. So I'll go ahead and drop down to the 1-minute now. And this is exactly what I want to see. So I like how price is looking right here. Obviously, we see on the 1-minute that we could have already had this position. So personally for me, once I saw this, because we're already in a higher time frame POY, the 4-hour, I automatically, like I said, regardless if this is a failed swing or not, I'm gonna take it because it's gonna give me a reaction anyways, okay? And I don't look for that many pips anyway. You know, I really TP, well, it really depends. So I used to go for a set amount of pips, but I realize that sometimes that pip count can definitely change depending on structure. So it's just kind of like sometimes I'll have really scalp positions, and other times, you know, I have a good like maybe good 15 to 20 pips. But it's usually the range is usually from like 10 to 15. Sometimes if I do TP earlier than that, it's really because price is like pissing me off, and I'd rather just TP earlier. So if price is kind of just playing around, and I think I've mentioned this before, if price doesn't just fly at your entry and it's kind of playing around, it's best to really move stops to break even or TP early if you want. I kind of hate when price does that, especially in the lower time frames. The candlesticks move super crazy if you're not used to it, but definitely just give it patience on the lower time frame. But another thing that I want you guys to pay attention to as we're getting into entries and looking for entries on lower time frames, specifically the 1-minute, I want you guys to pay attention to candles that form like this, okay? So candles that kind of look like this, obviously we see it on the 1-minute too. Like, I mean, if we really zoom in on this, I'm gonna zoom in. If we really zoom in on this, we can already see the pattern that we're looking for. And this is all confirmation that we need, okay? So you could have entered, I mean, you could wait, but the fact that price is pushing up so hard right now, I don't really know if I see it coming back down just yet. And being that I have traded GU for a few years now, I kind of know how it moves. And a lot of GBP pairs actually, when they push up very hard with volume, normally, normally, especially in the lower time frames, when they're pushing pretty hard, they don't have deep pullbacks until later. Okay, so it's kind of you're expecting a little more shallow pullbacks. If price is pushing really hard, then it will eventually have a deeper pullback later. So for this structure, we did clear liquidity down here, right? So we've cleared liquidity down here, and we know in the higher time frame on the 4-hour, we've already cleared all of this previous liquidity here to the left. It's already been cleared, right? But this is extra confirmation on the 1-minute that we've cleared down here as well. And on the 1-minute, obviously we see right here that we had broken minor structure here on the 1-minute. And then if price continues to break this next high right here, that's definitely breaking major structure, and that's a good confirmation to continue bullish. Although, you know, we already had multiple confirmations, you know, to continue bullish, but this would be another good one. So we'll see what happens here. So I'm going to end up playing it. And we do remember this markup that had marked on, I believe it was a 15-minute time frame. Let me see. Yeah, it was a 15-minute that we're kind of looking there for a reaction. So if I was looking here for a reaction, I'm expecting price to just blow past this, and then we can kind of see what happens after that. So We can see what happens now. So, I wouldn't get into an entry just yet. I mean, especially because like if I come here during live market and this happens too a lot, it's like I'll come here and the move has pretty much already happened, right? Um, and I personally would rather just kind of wait anyways. Although you could have gotten down here. It would definitely would have been risky, but I mean, hey, like you could have really just placed, you could have had like a 2, 3 pip stop loss at most. So if you're willing to risk that, I probably would have been willing to risk that as well. It's completely up to you because when we're looking at the 1 minute is around here as well, I probably would have entered just because of the sole fact that we have the three candle formation here. So whenever you have a candle that has this at the bottom, and we have a high to the left and to the right, you know, vice versa if we're bearish as well. If we have a high to the left or the right, or we have, you know, the three candle formation, and we have a low just in the middle. This is what another good indication is to tell that it created a strong swing low is if we have this three candle formation here. We have the bottom of the wick in the middle down here, and then we have two lows to the left and right of it, and preferably one of the lows should be engulfing the previous candle. So whenever you see this candlestick pattern, not saying that it works all the time, but for the most part, from what I've seen on the lower time frames, it definitely works. So if we see something like this forming and you already had seen it, and then you know if this was live market and I saw price kind of pushing like this, you can definitely place a position here. So let's see how it would look with the position tool if you did take something like this at the time. So if we did take it, let's say we took it right here, right? We saw price pushing. Okay, let's say we took it right here. Okay, so we could have had stops just below this. That would have been a 1.4 stop loss. However, I don't really like 1 pip stop losses because, you know, depending on the spread of your broker, um, price could just move, and depending on the time of what session you're trading. And I mean, honestly, price, like you could get taken out from the spread. So I suggest that you place, you know, maybe like a 3 pip stop. I usually 3 pip stop would be nice. You can even do a 2 pip if you want, but I account for spreads when it comes to anything very low as far as stop loss wise. So if I wanted to take this position, I would have probably gotten around here as I saw price pushing and we saw this, you know, candle formation down here. It's enough confirmation, and we're already in a higher time frame. POI, we've already swept higher time frame liquidity. So it's really it's really just alone off of that, you can just get a position. Okay. So say we got into this position, and then let's go to the 5 minute. Our targets would probably be my target at least would probably be to this high, right? This 5 minute high. And that's about 10 pips. And that's a-okay with me. You know, like I'm dropping a big lot size, so I'm completely fine with it, you know, and we still have a 1 to 3 risk to reward here, right? But if you do want to go higher, I mean, this is liquidity right here. So we know eventually that's going to get taken out. So you can even TP a little higher if you want. That'd be a nice 20 pip move. Okay. So depending on, you know, where you want to TP, completely up to you, but we see the possibilities on the lower time frame getting in a lot earlier, right? Then you have a really nice risk to reward, which is a 1 to 6. So you can get that entry, or we can go the more conservative route and you can be a lot more patient. So we'll wait on this next entry and see, you know, where we can get in the market again if we didn't take this overall move to the upside. So like I said, we're pushing with strong volume. So let's see what happens next. Okay, so price did break this area. And like I said, excuse me. Sorry, I don't know if you guys heard that. Anyway, like I said, price had broken this area, and this was kind of an area that I was paying attention to in the 15 minute as far as a retest, and where traders might be looking, you know, to get back into the market. So we have that area, and I'm going to go ahead and just delete this because we know that it was a major break of structure at that moment. So nothing formed yet as far as a trading range. There's no trading range yet, right? Because a trading range will only form once we have a break in the opposite direction, and there's no break in the opposite direction right now. We do have a low, but we do not have a high created yet. So we're still waiting on that. this is where if you did miss this move, you just need to stay patient. Okay. Like don't try, like never try to get into a move like this. If a move is already pushing, do not try to get halfway in that move because I promise you, the minute that you enter the move, it's not even going to be worth it as far as risk to reward. And more than likely, if you're entering on the 1 minute, it's completely going to go the opposite direction because of how fast price is moving on the lower time frames. It's constantly going back and forth between sell stops and buy stops faster. So you don't want to get yourself caught up on the 1 minute and screw yourself over that way. So let's see what happens. Okay, still going higher. So more than likely probably might break this. We might have a reaction somewhere up here for a POI. And as this is happening too, guys, keep in mind that if this is happening in the live market and you see this and you're like, shit, like I didn't get a chance to get in this, right? But you can also capitalize on the opposite end, okay? Like what is happening here? Price is pushing up. Price has to come back down, right? For some sort of test to continue bullish. That's how market structure works. Price would need to come back down to collect liquidity before heading bullish anyway, right? So, we can kind of gauge this and say, okay, hey, we have some highs here. So price maybe could react off of this area or it could react off of this area. So you want to pay attention to how price is moving. You can set a limit right here. So this is something that I would do too, especially if we're on the lower time frame. So if I see price, pushing up here, we could either get a reaction just above these highs or we could get a reaction right here, right? So, I mean, if you could set a stop loss, right? Sorry, not a stop loss. You could set a limit just above liquidity right here, or you could set a limit just above liquidity right here. Either way, each one's gonna probably give you well, depending on the move, so it could give you a pretty decent move. I don't know if price would come back down here though, just because I'm already looking at this and it's pushing pretty hard, right? So we don't know exactly if it's going to come all the way back down here, at least yet, right? So you want to just pay attention to that. But as far as this position, I mean, like I said, you could take it if you wanted to. You can have stops at this high, but we'll see what happens within this structure. It's all how you manage trades at the end of the day. Like you can spot these entries all day long in the 1 minute and you can ping pong back and forth, take advantage of the market. But again, it comes to your system, it comes to risk management, and it ultimately comes down to managing your trades while you're in the trade, okay? And you kind of need to manage them fast, especially on the lower time frame. Okay, so price actually reacted from this. So price actually didn't take out liquidity here, and price didn't take out liquidity here, meaning what happened here? So if price didn't take out liquidity here and we had tested this, this just created a lot more liquidity for us, right? So this created a lot more liquidity right here. And this liquidity up here as well. So once this is created, what happens now? This is created here and plus this here. So if price comes back down, eventually this will get taken out, right? Because we know that this is liquidity now on the opposite end. So let's see what happens. Okay, so price did hit it. So eventually it took out that liquidity. Okay, so price is still going to go higher. So it's not going to hit this, okay? So you can remove that. Depending on if you got in the trade or not, it's completely up to you. Oh, what is going on? Oh, I'm still in draw mode. That's so funny. Okay. So we can kind of see what price is going to do now. And this is why I tell you guys, price action is very important. Like you want to watch how price is moving, okay? So because this happened here, like I said, price did not take this liquidity out originally, okay? It like tapped this area and then it created liquidity here. So then eventually, it's going to get taken out. And obviously this pullback, it wasn't really much of a pullback, very, very short pullback, and it continued to break highs. Okay. Meaning that whenever price does have like a pretty short pullback like this, so what happens is this can definitely be used as liquidity next. Okay, so we can kind of look at this as our next liquidity point because it did create these wicks on the 1 minute as well. And price would ultimately still need to come back down because this area that we had marked on the 15-minute for a retest, it still has not been touched. So we can still look at it as an area of interest to execute off of. So oops. Okay. So let's see what happens now. And actually let's take a look at the 5 minute too, because I like to go back and forth between the 5 and the 1, to be honest. Because sometimes the 5 can look a little bit more clearer. And uh one thing too is you don't need to use 1 minute entries. I mean, if you feel a lot more comfortable using 5 minute entries, I mean, you can definitely do that too, because looking at the 5 here, it may be a little more clearer for some of you, but I'm already looking at an area potentially where price may want to go. So obviously we marked this area in the 15-minute, right? Um, we're looking for break and retest traders to look at that area as well. So remember, it's the psychology of it all as well. Okay, so we know that breakout traders are more than likely going to kind of look at this area, right? And we also see a point of interest here for those people that do trade smart money concepts, whatever. We have an imbalance right here as well. Okay, so this is probably an area where both of them would probably look for their entries at. Um, and so because we know that psychologically, that majority of traders will probably look for their positions here. I would probably look for my position lower because they could act as liquidity. Okay, remember in the higher time frame video that we just did for the 4 hour and the 1 hour, what we noticed was it came down to that area of the equilibrium. So it did tap it, and it created that liquidity, and eventually that liquidity turned into a failed swing low, and eventually price came back down to take that out. So majority of people are going to be looking at this area for an entry. But we can assume and look a little lower. So we already have this as our liquidity right here. So we can kind of see what else is being played out. But so far, I like anything below this break and retest area. So we'll just kind of have to see what happens. Okay, so we see that price had finally created a trading range for us on the 5 minute. So we see that price had taken out this liquidity here, and we had broken structure in the 1 minute. So we'll go back to the 1 minute and see how that looked on the lower time frame. Okay. So this is a simple explanation here. We have obviously another break and retest area right here. Okay, so price had taken out liquidity here and we fell. And sometimes I do also like to look at the 3 minute. It's very odd looking at the 3 minute, but honestly, if you guys have not looked at different time frames on TradingView or ever experimented with any different time frames other than the basic ones, I really encourage you guys to do so, because I like adding the 3 minute, the 7 minute, and like the 2 hour to my trading has really helped me. You just need to find what works for you. But I'm telling you, look at like the different time frames, because some can be very, very clear, like clearer than the basic ones. So I noticed for me, sometimes I will also take a look at the 3 minute because it'll also give me like an added confirmation. So as we're looking at the 3 minute here, obviously this gives us a very clear sight. Like it gives us clear indication that price had took out liquidity from this point on. Right here, it's so very clear that liquidity ends right here, right? Versus the 5 minute and the 1 minute, it looks a bit unclear, because when we go to the 1 minute, it's kind of like, okay, why would price react off of this area? Like other than the fact that it's a simple, break and retest area as well. Other than that, it's just kind of like, okay, stuff like this can be a bit confusing on the lower time frames. That's why you want to include the higher time frames in there. So when you have the 3 minute, this is very clear, right? We tapped just above this liquidity and we fell. The 5 minutes not as clear as a 3 minute because you could also take this as liquidity. You could be mistaken and take this as liquidity as well. So that's why you want to just pay attention to all the time frames. And the 7 minute looks pretty solid too. This is, like I said, just a simple break and retest. So it reacted from here and we just fell. So we're gonna just take that reaction. So obviously we're just waiting on the lower time frames for a reaction and for a range to happen because on the 1 minute this move was just pushing up, right? So we couldn't get into it, and so we're just waiting for like a optimal entry. So as soon as price begins to make a trading range here, and the reason we know it's a trading range is because what happens, liquidity needs to clear and we need to break structure. So we obviously see that liquidity had cleared and we broke structure on the 1 minute as well. We will break a structure here, which is a minor break of structure on the 1 minute. And then we're anticipating for this major structure to break right here as well. But once minor structure breaks, usually it should break major structure as well. Okay. So we have this structure right here. Let's go back to the 5 minute. We're liking this structure. Okay. So again, like I said, we're gonna kind of pay attention to how liquidity and how price action starts to build up that liquidity so we can confirm what POI we're looking at to get into an entry at. Okay, so coming down. Okay, so because this happened as well, what is this right here? This would be considered as equal lows. Okay, we want to pay attention to these and watch them on live market. So because this is, considered as potential lows, liquidity would be, our entry would be right beneath that, right? So like I said, we have this break and retest area, but we know majority of people is going to get into that area. So we want something a bit lower, right? Because if we go back to the liquidity models, we talked about how normally we have liquidity up here. And if we know that traders are going to get an area right here, that's just added liquidity. So it should be fed into something below that. Okay, so we're going to be looking at something, well, personally, at least for me, I'm probably going to be looking for something down here in this area. Okay, so I'd mark it just like that, this area right here. So we'll see what happens. You could still take this and then just have your stop loss at the low here. To be honest, it wouldn't really make too much of a difference in terms of RR, especially because we're already in the 5 minutes. So you would get a pretty decent um RR and move, but personally, I would want something a little bit more precise. But it's completely up to you. There have been times where, I will honestly sometimes even just set a limit, like just below liquidity. Like I'll set limits. So, and I'm really big on limits now. I do market execution when there's big volume pushes. That's the only time I'll probably do market execution if I am in the middle and I see price pushing from a high or a low. That's the only time I'll get in market execution. But for the most part, like I'm pretty patient and I'll wait till stuff like this form, until structure actually forms, and then I'll go ahead and place limits either here or, like I said, if you don't want to wait till price gets down here, and as long as it fits within your trading style, your plan, your risk management, then it's completely up to you. You can place a limit right below liquidity or right above it, and it should still work out in terms of RR. If you can still get a good 1 to 2 risk to reward, there's nothing wrong with that. I have a lot of risk, 1 to 2 risk to rewards. That's very common, so it's no big deal. But give me 1 second and just drink some water. Okay. Okay, I feel a little bit better. Okay, So we have this. So yeah, you can just definitely like, I mean, it doesn't matter where you take entries here. It's really just the psychology of it all, you know, if you're really looking at this. But let's play it and see what happens. Okay. Okay. What happened was it did hit all three entries. So like I said, you still could have got a pretty good, you know, move up until this point. But overall, this move at the bottom probably would have been the best because you would have probably experienced like, okay, price is pushing up and it's like, oh no, it's coming, you know, down to break even. Then next thing you know, you're a little bit of a drawdown, which it shouldn't be too much of an issue because we are in the 1 minute time frame, so it's completely fine. But like I said, I would have had entry right here, which price did hit. So you could have had that position here. And honestly, this would have been a decent move too, right? Because it was at least over 10 pips, right? So stops could have been at this low, or you could have just put it to the body of the candlestick. Sometimes I really just place my stop loss to like the bodies of the candlestick. But it's really up to you. So, because sometimes price can do this where like this is really irritating, right? So price will go up and come back down, obviously break even and then continue higher. So it's kind of like you want to just make sure that your stop loss is in a good place because sometimes this can really happen. Like you have a good entry here, but then price could come back down, take it out, right? But this is why we have to pay attention to structure because what happened here on the 5 minute, look at what happened here. So price did have a nice reaction here, right? We came back up and we had, you know, you could have TP'd right here too. And this was a simple break of structure. Remember, we marked this major structure here broken on the 5 minute. So this could have been a good TP point as well. It's just a simple break and retest. You could have just TP'd right here. But what happened here? This low failed to create a new high, right? This low failed to create a new high. It failed to break this high. So what does that mean? It means that this low is weak, meaning that it's going to get ran through again. So whenever we see this, we recognize in the moment of live market, like, okay, we had a good reaction, price came up, but it's like, oh, it's struggling to break this high. So immediately when you see this and you see price kind of playing around with it, it doesn't quite break this higher. It doesn't have, and you know, as we're looking at it too, it does display some choppiness. It doesn't really show huge volume pushes that it's going to break this high. So because we see that, in live market, you could have already anticipated if you were to hold this trade, like you could anticipate this where you're like, oh shoot, I see that, you know, price created a failed swing low, right? So eventually you're like, okay, I know this could get taken out or price could just tap it again and fly, which definitely had happened here, right? Before before price flew, it did come back down to this area. So this is just kind of like what you want to be mindful of. And like I said, if it is the right entry, price will fly. So if you do get caught up in a situation like this, it's best to TP early. Like I said early on, you want to the biggest thing with this strategy and just reading liquidity is you want to be aware. Just please be aware with your trading, guys, because this is what's ultimately going to make or break it. Um, you know, I don't want you guys to think that this strategy is the holy grail for everything because all strategies work. Okay, this is just the way that I like to trade, and this is like the way that I like to perceive the market, and it works for me. And it can work for you too, but please don't fail to um don't fail to ignore other things you need to have in order to make this strategy successful for yourself. You know, you don't want to ignore the basics. You don't want to ignore market structure, price action because those are very important. Those are what's going to propel you in your trading because you have to manage the trade while you're in it. Okay? So if you see something like this going on and you don't like it, then you either TP early or you know, if you're caught in this mess and you do see price going back down, I mean, the best thing to do at this point too is, I mean, if you see it already pushing up 10 pips, I would place stops to break even. If you're, you know, if you're worried about price coming back down, to take you out and, you know, you close with a loss. I mean, at worst, you're taking out at break even. And yeah, it does suck because then price did fly in the opposite direction. But we have to remember we're also on the lower time frames. Like this move barely had just happened. Like we are still in a 4 hour POI. Like there's so much more opportunity for you to get into another position, right? Because it's barely starting to break bullish. And we know that overall, when we look at the 1 hour, like look how much more we have to go if we're still potentially going to push bullish. Like we have a lot more opportunities within this. And you know, don't be upset that you didn't catch the move on one end of the market when you can capitalize on catching the move on the other side of the market. You know, that's exactly what ping ponging is within the market, right? Okay, so after that move happened, like let's see what price wants to do next, right? Let's see what price wants to do next. Okay, so we know at this point we're bullish, okay? But I'm gonna go back to the 1 minute and actually let's actually look at how we could have, if we did miss that move, you know, say like you did get break, you know, you got taken out at break even right here. So you could have definitely got back into the market. So I'm gonna actually just go back and then we can talk about how you can actually get back into the market. Okay, so we missed this, right? We're like, oh shoot, like got tapped out at break even, and it's like we think we completely just lost a move. No, just be patient. Another one will present itself. Okay. So now what is our new high? Okay. Our new high is this high because we had just cleared liquidity. Now we have to wait for a break of structure. Okay. So let's wait for a break of structure. Boom. Nice on the 3 minute. We have a nice strong candle pushing to the downside. I like that already. We'll go the 1 minute. We have a nice push to the downside as well. Okay. So we're looking at that. Pushing, pushing. And so I'm kind of like interested in this area too. Specifically this, because what had happened here too. Okay, so we already had cleared liquidity on the 5 minute, came back down. We see a nice break of structure on the 1 minute right here, minor break of structure, major break of structure right here. And what happened here too? So you want to, and this is where details actually matter as well, because on the 1 minute, what happened here? We had cleared liquidity and we had broken structure. So just based off of these two alone, I want to look for something around here. So there's a potential for this to be a POI area. Okay, so there's a potential for this to have a reaction at it. It could go lower, but we'll see. The only reason why I'm marking this up is because I see that we cleared liquidity and we broke structure. So if I see that, to me, that's considered a strong low, right? So let's get into this. If it doesn't work out, it's 100% fine. You know, you're not gonna win every trade. And like that's what I want everybody to understand too. It's like also when you scalp, like the more trades you take, like, you know, the more prone you are to just fucking losing. Okay. Like, I mean, losing a lot of those trades. So just don't worry about it. Just take them as they come. And even if you do have losses, like just accept them, like embrace them. Because taking losses are very important to your trading. Okay. So you could TP at that high, or you could TP at this area right here, right? Because this would be like another like kind of break and retest area, and this would potentially be another POI because we have this built up liquidity, right? Because these two would be considered as equal highs because we have so much wick. You know, eventually wicks will get filled. So we'll see. Because sometimes, like I said, GBP USD, it doesn't really have deep pullbacks sometimes. So like sometimes we will see like shallow pullbacks, but eventually those shallow pullbacks will eventually get taken out again before continuing in the direction. So like I said, you just have to watch price. But you could take something like this. But if you lose, it's 100% okay. It's 3 pips. I mean, even if you want to move it up a bit, like to 2 pips, you could do that too. Doesn't really matter. We might not get a reaction off here. Also because price is pushing pretty hard. So we could also get a reaction down here. But like I said, I like to pay attention to these areas for that sole reason, but you can't really tell until price is moving. So yep, so price is going to dab a little bit lower. But you see what happened here too is okay. If price comes down a little bit lower, it just taps you out and goes, right? So you could have also placed a limit right below this because I guess this was acting as liquidity as well on the 1 minute time frame. So that's something that you have to keep in mind is like just remembering that all wicks, literally all swing lows and swing highs are considered liquidity. Okay. So we had the 2 pip stop loss here. Honestly, if you had actually no, you would have been tapped out as well. So if even if you had a 3 pip stop, you would have literally price literally would have just tapped you out. And we'll okay, let's see if it's going to continue higher. Okay, so it did continue higher. Yeah. So okay, yeah, price would have just tapped you out. But if you placed your stop a little low, like to this break of structure right here, trade could have worked out. But it did have a shallow pullback. So I'm wondering if price is going to come back down for a deeper pullback, then continue up. But we'll go in the 5 minute and we'll see what happens because all of this is definitely liquidity again. So if it does hit this POI up here, which we're looking at, and you can mark this area as well. Like I said, this was liquidity. So we can see if this hits this and then it wants to come down for like a deeper pullback. We can see what happens. But I hope you guys are really taking note on how the market moves. Like you see how back and forth everything is. It's like it takes out one side, then it takes out the other side. So um, just keep practicing it. Just keep looking for it. And I promise that you guys will get it. As far as POIs, like I said, I don't want you guys to think that I'm trying to change whatever you guys have going on. If you already have a way of figuring out like areas that you want to look at, definitely keep that way that you're looking at, but also keep in mind that everything that we've kind of talked about, and you know, you'll be able to sharpen your edge when it comes to trading. Okay, so gonna hit it. Ooh, went higher. Okay. You know, I'm just gonna go to the 15 minute because it's kind of taking too long in the 5 minute. Okay. So are we gonna get a reaction here? I don't know if we will, but okay. So it just keeps going higher. So there was no deeper pullback at this point. Okay. So price just continued higher, and that's 100% okay. We're not always gonna get that deep pullback. Like I said, sometimes GBP USD when it's pushing with volume, it's literally just going to keep pushing. Okay. But now we can see where we were in the 1 hour, right? So we were in the 1 hour. Do you remember this structure? We were literally just talking about it in the last video, but it literally had just hit this area of liquidity right here. And another thing too is like what I want you guys to pay attention to. I mean, even if like those people that don't really trade, like, or they're not very familiar with imbalances and things like that, look at this area here. And these are really key areas too. If you see these little pockets, if you see these little pockets right here where price barely fills, like there's liquidity beneath it, but like there's nothing like but there's like a little space in between the last low and the previous high, vice versa, then you can even set a limit like right into this because normally, you know, price would react into this area sometimes and then it would continue lower. But these are good POI areas to keep note of as well, looking for a nice, precise, and tight entry. So price had reacted to this, like I said, we talked about it in the last video. So we have this reaction here. And because it's a reaction on the 1 hour, remember, because we know it's a reaction on the 1 hour, what can we expect on the lower time frame? We can already expect a break of structure, right? So let's go on 5 minute. Let's see if there was some sort of break of structure. Okay, I don't see anything like super promising just yet on the 5 minute. How's the 3 minute looking? How's the 1 minute looking? 1 minute is looking pretty good. You know, we had this push to the downside here. So, and we're at this area on the 1 minute where we can take this as liquidity here. And price had just taken it out. So I don't know, we could fall from here and we could continue lower. So I mean, if price were to fall from here, and you caught that right after when you saw price had hit that 1 hour POI, then we could probably TP, you could probably TP here. I mean, I would probably TP here just because it's a safe one, but if you want to make it an even 10, you can, because we have this little imbalance area right here. So these little areas, you can take note and just TP at these areas, right? So you can even TP right here, but see how price goes. Right there. Nice. Right? So price did kind of come back up a little bit, because what happened here is we have to pay attention again, right? So this high right here, failed swing high. And why is it a failed swing high? Because this low did not break this low, right? So what happens? Prices like needs to come back up, take out that failed swing high, and continue lower prices. And definitely it dropped right through that. So you could have got a definitely a nice move on that. Or you know, even on the 5 minute, we could have even TP, right? I mean, I don't know if it's gonna take all of this out. It could. Let's see what it wants to do, because this is a lot of built up liquidity here too. And remember, we were talking about compression movement in our liquidity models. So something like this would definitely be like taken, you know, taken out eventually if we have compression moving like this, and we have such a huge volume candle here, right? So let's see if it takes all this out. On the 15-minute alone, I'm kind of looking at this area for price to want to maybe head down to before we continue bullish. But like I said, we're just marking potential POIs, not entry areas yet. This is what I would do on like the 15-minute and the higher time frames, is just like I said, having a reference point of where I'm seeing liquidity on the higher time frame, and let's see if price actually gets those points. Nice. So price literally just tapped it, and we're heading up again. So when price comes to this area, what happens again? We can go to lower time frame and we can capitalize on that, and we can get another entry. Well, this looks super choppy in the 1 minute. So if it does look super choppy in the 1 minute, I would probably go to like a higher time frame. Yeah, this definitely looks a little bit better on the higher time frame. So like I said, if you prefer the 5 minute over the 1 minute, that's 100% fine. But do we see how precise this is, guys? Always understand that when we have liquidity, like I said, you can place limits just below that and it'll still tap. Even if price went a little further, you'd be in some drawdown, but you know, eventually if you have confidence in that analysis, or like I said, not even just confidence. I mean, it doesn't really matter how you feel about a trade, has zero to do with the outcome of the trade. But if you have a good risk management system and your plan's on point, then you should be 100% fine. And say like you wanted to take a position here just below that liquidity, and you know, we can place stops right at this low right here. Well, that's about 10 pips actually. We should go a little lower. We should, because honestly, my stop losses, I don't like them more than 10 pips. Like, I don't. I would probably have it actually right at this low. Yeah, just at this area right here, because it could potentially go down here. But I would want it at that area, or you can even have it like you really could have had it right here, kind of like a break of structure right here. You could have had it right here too, but it might have been a close call. So I would have had it around here. And then you would have had that entry, and then what are we targeting next, right? Like what what area were we targeting next? Price reacted off of this. So we know like on the 5 minute, I mean, this was a good area because again, it was another break and retest, or, you could have held all the way up to here, but that's not something that I would do. If anything, because this is like, above my pip count that I even want to go for. Um, and you could hold it if you wanted to, but because it's above mine, I probably would have TP'd way earlier. I probably definitely would have TP'd down here or something. And then after TPing down here, I probably would have just waited for another entry to continue bullish because once you know the bias of everything, especially stemming down from the higher time frame, once you know the directional bias of something, because when we go back to the 4 hour, like we are so bullish, right? Like we're so bullish right now. So the fact that we know that we're bullish, take advantage of that on a lower time frame. Like we know we've been bullish ever since this area right here, and we know that price literally just broke this high. Well, cleared liquidity. We came back down. We took out this liquidity, to continue to break to higher prices. So because we know that we're bullish in the higher time frame, we can take advantage of this. Like take advantage of this and know that we're going to be bullish on the lower time frames like for a while, because on the higher time frame, I'm looking, not I'm looking really up until here for liquidity to get taken out, really until this area, because like I said, this is the 4 hour trading range. This is our high, and then this is the low that it created. This is our low and this is our high. So this is our 4 hour trading range, and it needs to take out all the liquidity within this range first. And this is everything. So you should be able to capitalize off that. But yep, there you go. Those are the lower time frame examples and some entries. Um, if you guys have any questions about anything, please let me know. And otherwise, just continue to watch this video over and over again. I mean, honestly, we could go through, more examples, but it's really just the same thing. And I don't want to seem repetitive about it, but I really do want you guys to go over on the charts yourselves and really see for yourselves and test it in the live market for yourself. And it's really all you need, I promise you. But if you guys are, confused and you want me to kind of explain it again, if you still don't get it after watching this video numerous times, I still encourage you to watch it numerous times. But if you do need any help, please reach out to me. But this is going to be the video for the entries. It's pretty much the same as the higher time frame.